Who pays for closing costs? That is a question that we get from every buyer and every seller on every transaction. So today we're going to go through these costs one at a time for all residential real estate transactions in Florida. The first thing that I want to point out is that closing costs are fully negotiable. So on any offer that you submit or any offer you receive, you can negotiate who pays for what. That being said, there are some norms and standard type practices that we see over and over again, and that's what we're going to go over today. So let's start with the sellers. Sellers generally pay for commissions. Commissions can be depending on your agent and the type of services that they provide. They range typically between 5 to 6%. Now, this is almost always paid for by the seller. Also, that percentage now has changed a little bit with the NAR settlement that we had recently on how the administrative policies on how they're actually tendered to the agents or the brokers, that's changed. However, what hasn't changed is the amount that the seller is paying in total commissions generally on the transactions in the form of paying the buyer's agent directly or paying a credit to the buyer so they can pay their agent. The second thing that the seller may pay for is title insurance. Now, this is going to vary between county and county in Florida, and it's different in each county. For example, in Broward County, Florida, the buyer selects the title company typically, and so therefore the buyer will pay for the owner's policy for title insurance. In Osceola County, it's the opposite. The seller typically picks the title company, and because of that, the seller pays for the owner's policy for title insurance. So this is going to vary between county and county. So just know which county you're in and ask your agent what would be the typical party to pay the title insurance for the owner's policy in your specific case. Another closing cost paid by the seller is called documentary stamp tax on the deed. Now, this is known as a tax on the actual conveyance of the real estate. It's charged by the state. It's called stamp tax because there's a stamp actually on the deed that is recorded. So that's how it got its name. Typically in Florida, it's always 70 cents per $100 of real estate value. And it's basically for recording the deed into the public record, and it's typically paid for by the seller. Another closing cost paid for by the seller is the HOA estoppel. The HOA estoppel is a legal document. It shows a picture of a point in time. It shows how much money the seller may owe. It'll show if there's any violations by the HOA that may need to be resolved. It'll also potentially show if there's any litigation going on with the HOA. And also it'll show what the buyer is responsible to pay at closing if there's any sort of capital contributions, any advance payments of future HOA dues, or anything of the such. And it is a legal binding document that is required by most lenders. And it's typically a couple $100, so it's not an exorbitant closing cost, but that is one that is included and paid for generally by the seller. Another cost that's paid for by the seller is the municipal lien search. That is a search to ensure that the buyer will not be taking on any debt from municipalities, and it may also discover any unrecorded liens on the property. So that typically isn't that much, maybe $100, $200, but it is something that is paid for by the seller. Also, any unpaid property taxes at the time of closing will be paid for by the seller that are due, and those property taxes will be prorated between the buyer and the seller to effectively create that proration as the date of closing, so that the buyer will be reimbursing the seller for any prepaid property taxes and vice versa. I do want to mention that sellers also will need to pay off their mortgage at closing. Any encumbrances on the property will need to be paid off so the buyer can take clean title. So it's not a closing cost per se, but it still is something that is required to be paid off at closing. One of the last fees that is paid for by the seller is for the title company's fee for providing their services. Now, this is a good segue into buyer's closing costs because the buyer typically also has a fee that they pay to the title company for their title services. So the seller has a fee for the title services, and so does the buyer. Typically, a couple $100, maybe $500 range is what I normally see in Osceola County for this fee for buyers and sellers. So now with that segue, we're gonna go into buyers' closing costs. So the buyer is typically going to pay closing costs for any capital contributions that are due to the HOA, any capital contributions due to any club membership. Also, you may have prepaid HOA dues paid in advance. Typically 1 or 2 months is paid up front. So then you have a couple months to start paying your HOA dues at closing. Sometimes it's quarterly, it just depends on the community. Also, you're gonna have to pay anything that is related to your loan. So your loan has specific taxes, such as documentary stamps tax on the mortgage and also intangible taxes on the mortgage. These are typically paid for by the buyer. They are statutory and they are based on the balance of your mortgage, and they're paid at closing. The buyer will be responsible to pay for any loan related fees. So any points, any origination fees charged by the lender. Also, you'll have to pay generally some escrows, such as prepaids for insurance and property taxes to start the escrows with your lender. You'll also have to pay for any appraisals and any inspections that you want to do on the property. Now, appraisals and inspections are generally paid for prior to closing. A lot of lenders will charge an appraisal fee in the beginning, and you pay by credit card, and you get a credit back for that on your closing statement, but it is reflected on your closing statement. Any inspections that you require, that's going to be just paid out of pocket. It's typically not reflected on the closing statement, but that's paid in advance. So those are the two things that are paid prior to closing: inspections and appraisals. Typically, there also may be some brokerage fees at closing charged by your agent's broker. If you're the seller, it's charged to the seller. Buyer, it's charged to the buyer. It's really good to remember that all of these are negotiable. However, there are certain standards that you see over and over and over again, and norms that are done in certain areas. That being said, they're always negotiable. Just know what you're responsible to pay for. Buyers will also have prorated property taxes, HOA dues, the opposite of the seller. That all depends on the closing day. So that's not typically included in your closing cost estimate, but it is something that you will see on the final closing statement, just to true that up and reconcile between seller and buyer. So typically, a listing agent should be able to provide a seller with a net sheet. Just ask for it, and you'll be able to see what you can expect in terms of closing costs. It's also good to provide your loan amount to make sure that you're not having to come out of pocket with any cash at closing, and that you're actually going to be getting paid at closing. It just depends on the situation for the sale. And on the buyer side, you want to make sure you have a lender that gives you a robust, detailed loan estimate based on the specific property. I can't stress this enough. Some lenders will just give interest rates, and they don't really provide a detailed closing cost schedule. And I find that to be problematic. Later in the transaction, the buyers don't know what to expect at closing costs. Maybe there's some surprises, such as extra points or extra fees being charged by the lender that they didn't expect or anticipate. So those are things that we like to work with lenders that give a detailed loan estimate line by line by line, so you know exactly what to expect when you get to the closing table, so that there's no last minute fire drills or surprises. So that's very, very important. If you don't have a lender that does that for you, we're happy to provide you with some options of good lenders that we work with. And if you like this content, please click below to subscribe, and we'll keep the good content coming. Thanks for joining us.